Welcome. In this video, I'm going to be demonstrating how to use and how to trade the Ichimoku Kinko Hyo, which I refer to as the Ichimoku Cloud. This is known as a one-glance indicator, and with this Ichimoku Cloud, you're able to determine the trend is tradable, or if you should wait for a better setup on a specific pair within seconds. Within seconds of me looking at this cloud, seeing where price is in relation to the cloud, and other characteristics that I'm going to go on and tell you here in a second, I'm able to determine the trend is tradable or if I should wait for a better setup. But the cloud's composed of three dynamic lines that serve multiple functions we're going to get into here in a minute, as well as the cloud, which you're going to notice right here is the shaded areas. This shaded area is the cloud, shaded area is the cloud. So there's a few reasons I use the Ichimoku Cloud, and it's one of my favorites. One of the reasons being it can show me whether I should be in a bullish or a bearish bias. So whether trend is bearish or whether trend is overall bullish. It can show me trend strength as well as potential support and resistance areas. So I'm going to get into all this. Try to follow along. If you are having a hard time following along, what I would recommend is watching the video just to take it all in, and then watching it over again to actually take notes on it. So the Ichimoku Kinko Hyo, the Ichimoku Cloud, the three characteristics is this red line, this blue line, and this right here, this green line, and then the cloud as well. So the first thing I'm going to do is cover this red line. This red line pulled up in settings, you're going to notice is called a conversion line. So on this particular chart, it's called the conversion line. I refer to it as the fast SMA or the fast moving average. Now, the Japanese name for this red line is Tenkin. Just a little tidbit, little note of information that you can take down if you'd like. Traders often refer to it as the trigger line or the turning line, and again, you'll see it on this chart referred to as the conversion line. So the conversion line, I want you to use the setting 8. Basically, what this means is that it's taking the previous 8 periods, it's taking the average of the highest high and the lowest low, and then plotting it. So the next thing that we're going to take a look at is this blue line, which in the Japanese names referred to as Kijun, the Kijun line. I refer to it as the standard baseline. And you're also going to notice it here in settings as the baseline. Now this line is calculated by using the period of 21. You'll notice here I use 21, and that's the period that I would recommend using as well. Now how they come up and how this number is calculated is it takes the highest high and the lowest low of the previous 21 candles, and then it plots it on the chart. So once you have 8 and 21 in, we're going to take a look at the green line, which I refer to as the money line. Basically, this green line is called the lagging line, and all it means is that if prices are closing below the lagging line, price can be bullish. And if prices are closing above the line, price is bearish. As price converges with the lagging line, you may see a change in trend occur. And this is composed and calculated using the previous 26 periods, which is standard, lagging span 2 periods, or displacement right here. 52. And then displacement is 26. All right, so the next thing we're going to take a look at is basically how to trade this. Now that you understand the characteristics, now we're going to actually take a look at how can we trade using this Ichimoku cloud? So you're going to want to have two confirmations to trade using this Ichimoku cloud. The first confirmation is when price is in the cloud, you wait for a breakout, whether that be above the cloud or below the cloud. We're going to get more into that here in a second, but I want to give you the second confirmation that you're going to need, and you absolutely need both, that you're going to need in order to potentially place a trade using this cloud. The second confirmation, I'll give you an example right here, is the blue line and the red line, again, the conversion line and the baseline, they need to cross. So what you notice here is that the red line is on top, the blue line is on the bottom, they converge together, then they cross, the blue line is on the top and the red line is on the bottom. That's one confirmation. Now, you'll notice that price was bearish, there was a reversal candle here, price broke into the cloud, and then ultimately price right here broke out of the cloud. Now, another note to make is that you'll never place a trade immediately upon it breaking out of the cloud. You always want to wait for it to close above or below the cloud. And you also want to couple this with other buying or selling confirmations. So now we're going to take a look at how can the Ichimoku cloud act as potential support and resistance areas. One thing I want you to note is that when the cloud is thick, such as you'll notice right here, when the cloud is thick, that means that if, again, price is in a bearish movement and it approaches the cloud, there's a chance of it reversing before it breaks above the cloud. So what you'll notice here, and before I move on, I'll go ahead and finish. When the cloud is thick, support or resistance is strong. When the cloud, such as you'll notice here, is thin, support and resistance is weak. So for example, price is in a bearish movement. There is a reversal candle here. It reverses in, or excuse me, it breaks into the cloud, but it doesn't break above the cloud. It actually reverses, and then it breaks into this thin part of the cloud. Remember, you've already had your one confirmation here. Price actually goes above the cloud here, closes above the cloud here. So then from here you could start looking for buying indications. Now let's look for a selling opportunity. You'll notice from this breakout to here, price was bullish. Ultimately, price went into a ranging motion, broke into the cloud. Right here, I want you to make this note. This is actually a really good example. Price right here started to close below the cloud, just barely. Yet, the conversion line and baseline had not crossed yet. So you don't have both confirmations. It's playing around in the cloud. It actually goes into the thin part of the cloud where support in this case, or excuse me, resistance in this case, would be weak. It actually closes above the cloud. So before you get all giddy and excited and think you're about to just make a whole lot of money and just, place your order of 4 lots or a lot or a tenth of a lot, be careful because the lagging line, or excuse me, the conversion line and the baseline, the red and blue line, have not crossed yet. They actually don't cross until here. So let's see what happened. Price actually broke and actually closed above the cloud, and on the next candle actually reversed and closed below the cloud. So you won't actually have confirmation until right about here, which would be about here, that price has, that's the second confirmation you needed. So price is actually closing below the cloud. So now your interest should be a bearish interest. So now you're looking for your second confirmation. I need the red line and the blue line to cross. Well, right here on this 4-hour candle, the red line and the blue line cross. So on this particular candle, you can actually start looking for selling opportunities. Now, I just want to keep it really simple because you don't have to overcomplicate the Ichimoku cloud. The Ichimoku cloud is meant to be kept simple. So the last thing that I'll say is this blue line right here. Let me pull up a better example. What you'll notice is that price likes to trade above and below the blue line. And you can also get an idea of the basically movement or trend and taking a look at whether price is closing above or below the blue line. So what you'll notice here is that price is ultimately closing above this blue line. Therefore, it's in a bullish bias. It's in a bullish trend. You'll notice here that price is closing below this blue line, therefore deeming it to be in a bearish trend, or I'd have a bearish bias on it. So there you have it. That is how I trade the Ichimoku cloud. In the next video, I'm actually going to show you how I pair this with something called Donchian channels, and how you can actually use and pair these two together, as well as the third video I'm going to make on how to read naked charts, and basically get an idea of how you can take all of this information to make trades, take trades, and ultimately make money, which is the idea of it all. So I hope this video helps. Thank you, and have a wonderful day.